In this video, we'll be taking a look at a bunch of chart analysis in preparation for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. So the reason why we'll be taking a look at up to 10 different charts is because most of these charts were requested by community members in a Discord. So I just want to take my time to go over these charts real quick to see how we can spot out great trade opportunities for the week ahead. If you're not on our Discord, try to join our Discord because it's a very lovely community. You get to ask questions and share your trade ideas. Use the link in the description below to join our Discord. And lastly, if you're interested in learning to trade Forex like a professional, where I teach you how to trade Forex from scratch, check out our course on Udemy with the link in the description below. Without further ado, let's get started. So this is a gold chart on the daily time frame. So as we talked about earlier, a few weeks ago, we anticipated a bounce off this area of value, sending gold, higher. So that's what we got last week, and we made some solid profit, trading gold. So I'm going to go down to the lower time frame to show you what I'll be watching out for to open a new trade. But before then, just something to pay attention to is that on a one-day time frame, we can see gold made a double top at the highs. So this is the highs of gold. So this is all-time high. So gold seems to be heading towards the all-time high. But before we get here, I think we're going to get a pullback to give us that good opportunity to get on the train if we're not yet in on the trade, or if we haven't taken advantage of this bullish move yet. So going down to the lower time frame, so 2 hours time frame, for example, you can see we clearly broke through this area of resistance, right? With this massive bullish candle. So in my opinion, something to watch out for before going long would be waiting for a pullback. So we could wait for a retest back to this level and a bullish move to all-time highs, and my entry is going to be around this high. So it's going to be around the break of these highs, right? So that's if we indeed get a retest. Alternatively, we might get some sort of consolidation, giving us an idea or an indication of a bullish continuation pattern. So a consolidation like this and a break of that consolidation, giving us the idea that the bulls are going to step in to push the price higher. Because right now, if we decide to get into a trade, so give me a minute, I'm going to move this a little. So if we decide to get into a trade at these current price levels, then your stop loss would have to be around these lows, or these lows, and these almost 200, 300 to 400 pips, which is not a good risk to reward ratio in my opinion. So that's why we wait for a consolidation like this, some sort of a breathing ground for traders to decide where the price is going to head, if it's going to head higher or reverse to the opposite direction. So a consolidation like this will give you a tighter risk to reward ratio. So your stop loss would be just below the consolidation, right? And your entry will be at a breakout from the consolidation. So with your stop loss here and your entry here, then your take profit is going to be around these highs at the all-time high. So this would give you a tighter or a better risk to reward ratio with tighter stop loss. So this is the reason, one of the reasons why I wait for consolidations, right? So if you've been following me for more than a year now, this is how I trade. I wait for pullbacks, I wait for patterns to signify we are going to head higher, go lower if we are following trends. So in this case, we are following this bullish trend, and the best way to do so is waiting for a consolidation or a pullback like this. So a retest, followed by a bullish move. So if we're waiting for a retest, you could jump into a trade if we get a reversal candlestick pattern at the retest, maybe like a bullish engulfing candle, a very nice spine top on the higher time frame to signify that we're going higher. That will be another indication to go long, and your stop loss is just going to be around below the area of value, while your take profit is going to be at the all-time high. So this is how I trade. It gives you a better risk to reward ratio. Remember, it's all about probabilities and trying as much as possible to get the best trade entries with tighter stop loss. So that's it briefly for gold. I am not thinking about going short right now. If the chart changes, if the price action changes to give us an indication of an opportunity to go short, then I'm going to update that in our Discord, right? So moving on, I'm going to take a look at crude oil real quick. So crude oil has been in a massive bearish trend. You can see making series of lower highs and lower lows. And for the past 2 to 3 weeks or so, we'll be talking about how crude oil might either break the support level or break the resistance level. And I talked about this explicitly in our weekly analysis, the previous weekly analysis, and we did get a break from the support level, which made around, I'm going to check how many pips. So this was around 600 pips or so. So if you followed us on Discord, I sent an update last week, so this would have been a very good trade opportunity. So going down to the lower time frame, so before we go down, I marked out this level here. So this is a very good area of support. So this could be our next potential target for crude oil. So I'm going to go down to the lower time frame to see if we can pick an entry, right? So I'm going to try as much as possible to do this real quick. So this is a crude oil chart on the 2 hours time frame. So you can see we had a break of the support level, we had a retest, and we had a dump. Right now we have consolidated a little, right? So these are a trade, like I said earlier. We consolidated a little, and now we are forming another good support level. So my opportunity to go long, or a scenario to go long, going back down to the 1 hour time frame. So for crude oil, a scenario to go long would be, in this case, waiting for a consolidation around this level, which we already, are currently forming a consolidation and a bearish breakout. So this would be a scenario for me to go short on crude oil, right? And if I go short, my stop loss is going to be just above the consolidations. So my stop loss is going to be around these highs here, and my take profit is going to be around this support level. So this is how I'm going to trade, and I'm going to wait for a good breakout, a candle close below this support level for me to go short. So you have to be careful with crude oil, because there's been some spikes in the market when it comes to crude oil lately. So it might not work out like this. So we might get some pullback. So we might see something like this, maybe a fake out, then pull back to the upside, giving us a wider or a larger consolidation before actually coming down to break the support level. So this is something to pay attention to when trading crude oil, right? So like I said, I'm going to wait for a consolidation like this with a good candle close below this consolidation to go short, and my stop loss is going to be tight as maybe 100 to 150 pips, because crude oil is a heavy commodity. So that's my brief outlook for crude oil. Or I'm going to wait for a reversal, then another dump, that consolidation, and a breakdown. So the idea is waiting for a break of this support level with confirmation before going short, and confirmation could be a retest. But if we get a consolidation above the support level before the breakout, then a retest might not be needed. So this is what I'm talking about. If we get a consolidation above the support level and then we get a breakout, then we don't need to wait for a retest again, because this consolidation here already made the decision for traders in the market that the bears have decided to send price downward. So this is how I trade. Unlike what we had here, you can see we had a massive red candle all the way down, breaking the support level before we reversed. But if we get a consolidation on the support level before the breakout, then there's no need to wait for another confirmation. You could just jump in with a tighter stop loss targeting the support level. So I'm not going to go long on crude oil right now until we get into this area of value. Then I'm going to make an analysis to update you on what I'm watching out for crude oil. So moving on, we're going to talk about GBP-USD real quick. So GBP-USD has been moving within a range. So you can see this resistance level and a support level. So you can also call this an area of supply, and you can call this an area of demand, because buyers are likely going to jump in here. The bulls are likely going to jump in here. And you can see we had a fake out, right? Just like we had here. So that being said, we broke this trend line. So you can see we had multiple touches, 1, 2, 3, 4, and we had a very good break, and now we're consolidating above this trend line. So my scenario to go long will be waiting for price to break above this resistance level. So this area here is clearly a good resistance level. Excuse me. So this is a good resistance level, and I'm going to wait for a break of that resistance level for me to go long, right? So I'm going to go down to the lower time frame to show you something really clear. So yeah, so this is the 2 hours time frame on GBP-USD. So I'm going to wait for some sort of consolidation around this resistance level and a breakout. So this would be my scenario to go long for GBP-USD. So my entry is going to be above the breakout of the resistance level and above the breakout of the consolidation, and my stop loss is going to be below the consolidation. Again, this is the reason why I trade after consolidations and breakouts, because number one, the consolidation, the bullish breakout from the consolidation signifies that the bulls are still in charge, and it gives us a tighter risk to reward ratio, a tighter stop loss. So this is how I'm going to trade GBP-USD. Alternatively, if we don't get this consolidation or a bullish flag at this resistance level, then we might see something like this. So we might get a breakout, then we might get a retest, and a bullish move. So this will also be another opportunity to go long. So I'm going to go long above the break of these highs. So lastly, another case study would be waiting for something like this. So waiting for a breakout, a bullish consolidation. It could be a bullish flag, bullish rectangle, symmetrical triangle with a bullish breakout. This would be my scenario to go long, because this signifies that the bulls are in charge and they are willing to keep pushing price higher. And my entry is going to be at the break of the bullish consolidation. My stop loss is going to be below that consolidation. Same principles, it works most of the time. This is where you get to test your patience with the market to see if you are patient enough to wait for your setup to get fully formed before jumping into the trades. So that's it briefly for GBP-USD. Right now, I won't be thinking about going short for GBP-USD. So I'm just going to watch this resistance level, get that consolidation and a bullish breakout for me to go long, or wait for a breakout, a retest, or a consolidation and a break of that consolidation before going long, just as I have illustrated on the charts. So moving on, Bitcoin, real quick. So Bitcoin has been in a massive bearish trend, and we've followed Bitcoin as much as we can. So right now we had a falling wedge, right? So this is a falling wedge, which usually signifies the end of a bearish trend if it gets a bullish breakout. So as you can see, this falling wedge had a bullish breakout, and we had a consolidation around this resistance level. So this is what I'm talking about. You see, when price broke the the falling wedge, we had a consolidation at the resistance level, okay, and then we had a bullish breakout. So this gives you a confirmation that the bulls are in charge. So right now, with what we can see on Bitcoin, I am going to wait now for another consolidation. So this is the 2-day chart, okay? So I'm going to wait for another consolidation and a bullish breakout to go long for those who day trade Bitcoin. So to make this clear enough, I'm going to go down to the 4 hours chart, so you get my point clearly. So the cryptocurrency market, the cryptocurrency market is always opened. Yeah, so on the 4-hour chart, I'm going to wait for a bigger consolidation, right, and a breakout. So a break of this bullish flag or a bullish continuation pattern is what I'm watching out for to go long on Bitcoin. If you are going to be day trading Bitcoin, I don't day trade Bitcoin, okay? I do that once in a while, but for now, I'm just on spots, buying real Bitcoin and holding it for long term, right? That's what I'm doing right now. So for those day trading, you wait for a consolidation, a bullish breakout as a confirmation to go long. Alternatively, you could wait for a retest, right? So whichever occurs first, wait for a retest. So retesting the $25,000 level, and a bullish reversal to the upside would be your confirmation to go long. So if you want a tighter trade entry, then you could wait for some sort of candlestick reversal pattern at this retest for you to go long. It could be a bullish engulfing candle, a spiny top, but I prefer to watch out for bullish engulfing candles because in my opinion they are the strongest. So this is my outlook for Bitcoin. So talking about levels, I'm going to go down to the 1-day charts to show you my first key level to watch out for when trading Bitcoin, if you're interested in day trading Bitcoin. So so the first significant level would be at the 30k level. So this is the 30k, yeah, so between 30 to 35k. So between 30 to 35k is going to be the first level I watch when trading Bitcoin, so you could jump into a trade and take profit around these price levels. This would be a very good supply zone if we're going to see any reversal from the bears sending price downwards. And if we break above this level, then we're going to go higher. By that time, I'm going to make more analysis to share my ideas on what I'm watching out for Bitcoin, right? So moving on, USD-JPY real quick. So this is a daily chart. As you can see, we had a massive bullish move to the upside, and then we had a bearish run. So clearly, this bearish run here broke this bullish market structure because we made a lower low. We made a lower low lower than this higher low if you are considering this bullish move, and we had a retracement. So this is a bullish retracement, not a reversal. So there's a difference between a retracement and a reversal. I talked about that in our course. Check the link in the description below to get our course. It's going to help you a lot. So we had a retracement testing this supply zone. This is a very good supply zone or a resistance level or an area of value, whichever you choose to call it. And then we had a spiny top at this price level, sending price downwards. Okay, so now we know price coming downwards in probably going to be the continuation of this massive bearish trend. So I'm going to go down to the 4-hour chart so we can spot out good trade opportunities for the week ahead. So on the 4-hour chart, I marked out important price levels. So this is a very good supply zone, sorry, a very good demand zone, which is an area of value, or a support level, whichever you choose to call it, right? Some people call it demand level, some people call it area of value, some people call it support level. They are all the same thing. Some people will confuse you with smart money concept and all that. They are all the same thing. It's all about understanding price action. So we had a very good consolidation at this area of value, as I indicated in our weekend analysis, right? So now to go short, because this is clearly a short trade opportunity. So I'm going to go down to the 2-hour chart. So to go short, I'm going to wait for a retest, because USD-JPY, excuse me, can be confusing sometimes. So I'm going to go short if we get a retest and a reversal, a bearish reversal. So this will be my opportunity to go short. So this retest, I'm going to watch out for a bearish engulfing candle specifically before I go short on USD-JPY, because USD-JPY can be tricky. You can see this bullish price rejection just when we thought we had a clean breakout. So it's good to be careful, but right now it seems we've clearly broken off this area of value, but I'm still going to wait for a reversal before I go short. So the reason why I'm going to be very careful with USD-JPY is because we already have great trade opportunities on gold, crude oil, GBP-USD. So I'm not just going to jump into USD-JPY unless it's a very solid trade opportunity. That's why I'm going to wait for a retest. So as for going long, I don't think I'll be going long on USD-JPY because it's clearly a bearish trend after this bearish retracement, right? So moving on, we're going to talk about Nasdaq. This is also a very good one. So I'm going to zoom out a little. So this Nasdaq, you can see we had bearish trend. So price making series of lower highs. So we had 1, 2, 3, 4. So we had 4 lower highs and lower lows, of course. And then we had a bottom here, which is support level with 3 different price reversals. So 1, 2, and 3. Then we had price rally all the way up to these price levels where we took out these highs. So this actually made a higher high. So this high is higher than this high. So which means there's a good chance this trend, this bearish trend might be coming to an end or not. But we're just going to follow up with price action to see how we can spot out good trade opportunities for the week ahead. So taking a look at the chart, this is a 6-hour chart for Nasdaq. You can see we bounced off this area of value, off this support level, or off this demand zone, however you want to call it. So this is a demand zone, this is a support level, this is an area of value. We had multiple price reversals showing us that the bulls are holding these price levels very strong, and we had a run all the way up, breaking this trend line. So this is kind of like a descending triangle with a bullish breakout after a bullish move. So this means there's a good chance price is going to head higher, right? Then we have this area of value. So this is resistance level. So if you are going long here, you have to pay attention to this resistance level. So I'm going to go down to the lower time frame to see how I'm going to take this trade. So this is a 2-hour chart on Nasdaq right now. So 2-hour chart, you see we've had a pullback. So I'm going to mark this out on the chart. So this is a high, the high we took out after breaking the trend line. So I'm going to zoom out a little so this is clear enough. So yes, we had a good breakout. So excuse me, zoom out once more a little. Yeah, so we had a good breakout from this trend line and we had a pullback. So right now I'm going to wait for a bit more consolidation, right? A good consolidation and a break of that consolidation to go long. So this would be my scenario to go long for Nasdaq, and I'm going to go long at the break of this bullish continuation pattern if we get one. So if we don't get one, I'm not just going to jump into a buy trade here, because my stop loss would have to be around these lows or these lows. But with this consolidation, then my stop loss is going to be just below the consolidation or below this high here. So my stop loss is going to be around here, and my first take profit target is going to be within this resistance level. After this resistance level, then we're going to aim higher as the trade evolve or as the price action evolve. So this only what I'll be watching out for to go long on Nasdaq, because these are heavy stock indices, right? So to open a trade, you have to be very careful of your entry, and you have to be sure of what you're doing before you jump into trades. So if we take out these highs here, then first target is going to be around this place. So oh yeah, this corresponds to this area of value here. So this is a very good significant level to pay attention to. But if we take out this level, then next stop is going to be around these highs, and next stop is going to be around these highs, and so on, so forth. So before we get here, I believe it would be next week again, and we're going to reanalyze the chart. Just in case we get there so fast, join us on Discord, where I put out occasional market analysis, okay, to let you know, to keep you updated with the charts, right? So that's it briefly for Nasdaq. Moving on, we're going to talk about EUR-USD. So EUR-USD, this is a massive bullish move, and now we have a bearish reversal, right? Or a bearish retracement. Yeah, sorry, a bearish retracement. So this could be an opportunity to go long in continuation of this bullish move, or this could be a break of market structure. But I'm not going to call this a break of market structure yet, because we have not taken out this low. Because you can see we made higher low, a low, sorry, swing low, higher low, higher low, higher low, and higher low here. But this price consolidation have not taken out these lows, so we are still within the range of, you know, the bullish momentum within this trend. So going down to the lower time frame, I'm going to go down to the 4 hours time frame real quick, just to show you what I'll be watching out for to go long. So right now for EUR-USD, I wouldn't be going long at the current price levels, because this is currently no man's land. It's no man's land because we are not around an area of value. We've not had a breakout to wait for a bullish flag or nothing. So I'm just going to wait for either price to retrace back into this support level so I can look for opportunity to go long, or I'm going to wait for price to break, okay, to break this support level, get that consolidation before I go short. So this is what I'm going to watch out for to go either long or short for EUR-USD. So if we indeed break these highs or break these highs, then I'm going to send out chart updates to let you know what I'm watching out for to go long for EUR-USD. So for now, because this is not a very clear area of resistance, I would pick this level, but I would like to see what EUR-USD does when it gets into this level before I decide whether to go long at the break of this level, or whether to be patient with the market to see what traders do, right? So whichever happens, so if we decide to go higher, if we continue to go higher and we break through this area of value, then I'm going to send a chart update to our Discord server or our Instagram page to let you know what I'll be doing in order to take advantage of that movement. But if we decide to go down first, then I'm going to look for opportunities to go long at this support level that's waiting for a very good candlestick reversal pattern, like a bullish engulfing candle or a very nice doji or spinning top to go long, or I'm going to wait for a breakout and a confirmation of that breakout to go short. So that's it briefly for EUR-USD. Moving on, I'm going to talk about AUD-USD right now. So AUD-USD, this seems to be a downtrend, right? You can see the bearish flag, bearish breakout, we went down, and now you can see price ranging within this area of value and the support level. So now I would consider going long, okay? That's because I think gold is going to go higher, and I think EUR-USD and GBP-USD is going to go higher. But remember, we're talking about waiting for consolidations along the way. So those consolidations might be sufficient enough for AUD-USD to reverse from this area of value back into the support level. So right now we are currently at an area of value, so you can see support level turned to resistance level. So in order for me to go long, okay, in this case I'll wait for a good breakout, a good consolidation forming some sort of bullish continuation pattern before I go long. So this is the only scenario in which I go long, because if this happens, it means this bearish trend might be coming to an end, so we might be heading higher, okay, in line with the bullish momentum expected on gold, GBP-USD and EUR-USD, because they are all positively correlated. Alternatively, if we're going to see bearish momentum, then I'm going to wait for price reversal. So I'm not going to go short at this area of value. Even if I get a bearish engulfing candle, I'm not going to go short because it's too risky. I know yet a bearish trend is ideal to go short, but the best case scenario for me would be waiting for price to come back to this. Excuse me. Just give me a minute. I'm gonna take this off, and yeah. So the best case scenario for me for AUD-USD to go short will be waiting for price to slowly come back to this support level, consolidate a little, and then give me that bearish breakout. So this would be the perfect case study or the perfect scenario to go short for AUD-USD if I am indeed going to go short. So I'm not going to go short at this area of value because it's too risky for me, because there's a good chance we break above this area of value. And by the way, price is not yet overbought, so there's a good chance the RSI comes to the overbought region, which might lead to a bullish price breakout. So that's the reason why I'm not going to go short at this area of value. Instead, I'll wait for price to come into the support level, consolidate, and break out, or break out first, consolidate, and enter at the bearish break of that consolidation. So you need to understand how price action works for you to take advantage of this price movement. So you don't just jump in because we are at an area of value. You need to understand the sentiment around the market and the fundamentals driving the market. So right now, you can see the Feds are trying to stimulate the market because of the bankruptcy that happened last week. So that's still affecting the market a great deal. So there's a lot of liquidity, and we might see some bullish momentum across all assets in the market. So moving on, USD-CHF. This was requested specifically by one of our community members. Now, taking a look at this chart is messy, in my opinion, right? Normally, I stay away from this kind of chart because there's no clear direction. You can see price with moving within a very huge range. So this is a daily chart, of course. We had price moving within the range. We had a bearish move. We had price going up, not making a significant higher high. Okay, and we had price coming back down. And you can see this choppy price movement, which doesn't give you a clear indication of when to go long or when to go short. So normally, I stay away from this kind of chart and just pay attention to the clean and clear charts. So why would I want to trade USD-CHF when I've got gold, I've got crude oil, I've got Bitcoin, I've got GBP-USD, I've got USD-JPY, I've got Nasdaq, and I've got EUR-USD and AUD-USD, all with clean charts. So try not to force yourself, carrying out analysis on charts that are not clean enough when you have better charts. You make the same profits, whether you trade USD-CHF or you trade EUR-USD or you trade gold, right? But you would be at an advantage if you trade charts that are clear enough and precise with their price action. So if you're insisting on trading USD-CHF, you could take this trend like this. So when you take this trend like this, you can, draw out this area of value. So this is all I see on USD-CHF, just to be honest with you. So this is all I see. So this is a support level, and this is a trend line. So this trend line indicates, okay, a bearish breakout, a consolidation might lead price downward. Support level means there's a probability that we might bounce off this level to go higher, right? So the best thing you do is going down to the lower time frame, which I'm going to do right now. So going down to the 4 hours chart, you can see that even the support level is not clean enough because we've barely had 2 current price reversals of this level, and we've had series of choppy movements both to the downside and to the upside. So ideally, I'm just going to stay away from this chart, and I advise you do the same. Focus on charts that are clean and clear, like gold, EUR-USD, AUD-USD, or GBP-USD, as the case may be. Lastly, we're going to take a look at the DXY. So DXY is the dollar strength index, which measures the strength of the US dollar, and this will give us insight on how to trade currency pairs, okay, the direction to expect these currency pairs to head to. So currency pairs having the dollar as the base currency are positively correlated with the DXY. So that means USD-JPY is positively correlated with the DXY. Okay, so USD-JPY positively correlated, and you can see we had a very bearish move on DXY. We had its retracement, and now we seem to be having a bearish, reversal from that retracement. So I'm going to go back to USD-JPY right now on the daily time frame, so you see it looks similar. Okay, so I'm going to zoom out a little, so just to show you what I'm talking about when it comes to correlation. You can see, you can take a closer look at the chart. You see this USD-JPY, we had a bullish move, we had a bearish reversal, we had a bullish retracement, and now we're having a bearish reversal. So you can see DXY right now, we had a bullish move, we had a bearish reversal, now we had a bullish retracement, which means there's a good chance price is going to go down. So if this happens to the DXY, because the dollar is the king of the Forex market, right? So if this happens to DXY, maybe DXY comes back to this support level, then you expect USD-JPY to be bearish as well, because it is positively correlated to the DXY, because the US dollar is the base currency in the currency pair USD-JPY. While for currency pairs like EUR-USD, GBP-USD, AUD-USD, and for assets like gold, they are negatively correlated with the DXY because they move in the opposite direction of the DXY. That's something to pay attention to. So there's a good chance DXY might be coming to this area of support. So I'm not going to be going down to the lower time frame, because you don't trade the DXY. You just use it as an indicator to trade other currency pairs. So looking at this chart, there's a good chance we come into this support level. And if you believe we're going to come into this support level using technicals, then there is a good chance you see a negative correlation to, you know, assets or currency pairs having the dollar as a quote currency, and you see a positive correlation with currency pairs having the dollar as the base currency, like I illustrated using the USD-JPY. So that's it from me, guys. If you enjoyed this week analysis, leave your thoughts in the comment section, like, subscribe, and invite your friends. And lastly, if you're interested in learning to trade Forex from scratch, like a professional, I'm going to teach you and break Forex trading for you. Check out our course on Udemy, and I've attached the link in the description below. So that's it for me, guys. See you next week.